Hello and welcome, as this is the end of Saturday, the 20th day of July 2018. My name is Derek. I'd like to welcome you to the Money Charts channel. And we'll take a look at the Bitcoin price. And like always, all trades, all bets, all wagers within your own risk, own reward. For myself, risk-reward management is always job number one. I've got two lines drawn in the Bitcoin chart. The top one, it's a neckline for the head and shoulders pattern, and the bottom is pretty much the support area, although it's pierced below it. That's because the first line represents the 6,000 support from the early February lows. The second line represents the support from the early parts of April. And going back in it again, the third $6,000 test represents the entire area in which to trade it in. And the pattern of that, the inverted head and shoulders pattern, basically from June 10th through July 17th, or that of about 5.5 weeks within this time frame. So I've talked nausea about 3,000 on this channel, and there's the line for 3,000. This represents a 38.2% Fibonacci retracement, an exponential Fibonacci retracement level from the long-term lows from way back when, about under 200, and of course these $20,000 highs. So the move in which it has had is a major statement, the big move higher, because on the date of July 16th, it started at the 18 average of lows, it closed it barely above it, but then it followed through with a magnificently high up day, making the 18 average soar in a very good rate of ascent, get above, of course, the neckline well, and to a previous resistance level from before, so it got to a next level successfully. A few days of correcting via that of time, but given that it's an 18-day average, it's going to take more days going sideways to complete a extended time correction. It doesn't need to have a long correction to say, okay, it still doesn't have enough gas for a big move. No, if it wants to go, you'd have like a 3-4 day correction, and then that would be what it's at. It's enough energy. It's almost like the theory of plugging your phone in for like a half hour just to use it, like a little bit of energy, just a small amount if you look at it in that term. However, because of the magnificently sized up move, this is going to make technical analysis very easy, because the statement has been made. And when you want to get heard, sometimes you have to scream. And that's what this move is. It's a move to get heard from that of screaming. Okay, I heard you. I know what you want to do is how I perceive the market. Now go ahead and do it. And doing it is reverting the trend. And there's nothing wrong with coming back to the neckline where you came from. Ultimately, this is why I love the 18 average, because on any kind of breakout, I'm always going to look at a newly rising or any kind of rising 18 when it's extended above it to be a support barrier. And it's not a surprise most of the times when you break a key resistance that you are obviously had the 18 below the resistance. That's mathematically always the case. But when it rises, that it just happens to meet up, that if there's going to be a price correction lower, it would match together. If an event like this were to happen, when it has this type of velocity of a rally, and thus be that of a failure, you would see failure signs when you see weakness below the neckline. If such is the case, then that is the large statement again that is, oh my goodness, a large size failed breakout. And I have thought for quite some time that if we're going to have a move to 3,000, not only would it be a very fast move that would most likely see the price go from like somewhere in the high 3,000s or noticeably below 4,000, something like 3,800, down to 3,000 fast, and probably back up to 3,800 fast as well. But outside of that, I'd also think that before an event like that would happen, that there'd be an ultimate failed breakout. So therefore, if that's the case, and it's going to happen soon, well, there you go. That would be the failed breakout. Long term, I still need to see it get above the previous high of 9,800 and change for me to be in a major full conviction mode. And then time's just now going to wait and see how this plays through, because I realize any type of large move where I see, 3-4% down, 5% down a day, well, that just means to me it's at an area coming back to where you came from. One of the trade ideas in technical analysis is if you're not buying on a breakout and such like this, And you see this happen. Well, now place your buy order for somewhere around like 68.40, 68.25, 68.02, maybe even 6900 or something like that. And then you're playing for it to come back to where it came from, trying to get a better price. And then if you're playing stop loss, maybe you could put a stop loss around 64.20-ish, and you're playing for a big ride higher. That's one method that I know of as far as a trade, because it's not a surprise for it to come back to where it comes from after a significant breakout, and thus be a spot where higher lows are made. On the single hour time frame, we can see the sideways consolidations at the lower end of it now, declining 18, having a second resistance test of a newly declining 18 average after it had this little wick period go above two highs not seen in many a weeks. And really, this was the same pattern we've seen multiple times, doing it again. And of course, if this thing breaks down, there's a long ways to go before I'm going to be calling this rally a bullshit rally, or thus of a failed move. But looking at this even more short term, what we've seen in here is that this is the case almost the exact same for the previous 4 or 5 that's happened in the last several weeks. And that is, you break resistance and on good volume, and you immediately sell back, and then you just rip towards and below its previous trading range area or congestion area, which was the case, making a low here, and then a second leg lower in here, hit multiple times in support, and then now this most recent low. So it had one large move going from 7,700 down to 73 2/3 quickly. So that's a difference of 330 or so on that. That was about a 5% instant move, and then smaller moves lower since then. It hasn't done anything more really than bring it down to the lower end of this long range bound market. Of course, piercing below it, but pretty much at the lowest level. And as stated before, any of this gap fill area, well, that's just what's needed to make that higher low setup, and something I really wouldn't be too concerned with in that of seeing declining moves. Not at least until it can show weakness below where this line happens to be, because again, the statement has been made. The July 16-17 rally is that, and it's either going to signify that of the great reversal, and with news about the ETFs and stuff like that, you know what, that wouldn't be that big of a surprise. And of course, like I said, the nauseous talk I've had about 3,000, this is a precursor that wouldn't surprise me if, again, I see failure within its correctionary move back lower. So I'd like to thank you for tuning in, and have yourself a magnificent day and rest of the weekend. Bye-bye.